A lot of people are getting really excited by the fantastic price appreciation inside the main markets in the past trading session. Typically, when people are new to financial markets, when they see green, they buy. When they see red, they sell. Is there a better way? Trading and investing are serious endeavors, and all investors become traders each and every single time they buy or sell. Investors have the superpower of holding on. Traders have the superpower of knowing when things are turning around. Combining both creates two superpowers. Who wouldn't want two instead of one? When it comes to superpowers, that is, and Rule 138 is an absolute ripper. If you understand that as an investor, you're just trading, and if you're investing emotionally, you're an emotional trader, and that's actually the worst thing that you could ever be. But what is the solution? In this video, I'll share some of the trades I did from yesterday, when we saw extreme fear inside the market and no end of bearish headlines. And I'll give you a bit of an insight how you can stay inside the market as a trader and do very, very well. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. I just wanted to give you a really quick shout out to Sanjeev. A busy week for me, but he still managed to hit all his trading goals thanks to the CTKS knowledge. Well done, my friend. We have such an amazing global family. It's absolute pleasure to share this time together. I just wanted to show you from yesterday, these were my sales on PEPE. PEPE really pays out. And students inside the profiting course and inside the masterclass, you know that I have specific position sizes, and I want to introduce you to a new way of keeping your finger on the pulse if you think the price action is getting a little bit wobbly. Now we can see here on PEPE, these were all done in the past 24 hours. These were done yesterday and these were done this morning. Overall, pulled in around 6,798 US dollars. That equates to nearly 11,000 Australian. Yes, I am an Aussie. The thing to note, with all these specific trades, they're all done at spot. There's no leverage involved in these returns at all. And you can see this one is a 5.25% return, a 3.29, 4.42, etc. Profiting students will understand this really well, and in order to do this I use the PEPE indicator, which is available under the extended service. Now a lot of people doing big trades with big money and big leverage will say, Ken, that is just not enough. You should do many more percentages than that. It should be trillions and billions, 100x's minimum. But Crypto Brett said it incredibly well. We all know what small percentages turned over frequently do. And a shout out to our global CTKS family. You're awesome people. I love the comments in yesterday's video. Let's use Brett's example, and let's just say that I could turn this profit over once every day for 365 days. This is not a cumulative profit, it's just that profit. That would equate to around $4 million. Not too shabby. But what's the key in this? TF Theta said it really well. The cheat sheet and three-dimensional risk management are essential analysis before we enter the market. Price moves in waves between CTKS structural levels. When I look at the market, I look at the market like a scientist. I want to know where structure is getting hit, what's happening across the indexes, what's happening across Forex, yields, the VIX futures, everything. This is the way of a professional trader. But I also have an investing bag. In order to invest and trade more effectively, we have to understand that price is always moving in a wave-based function. If it recovers, that's one thing. Change of trend is what occurs under those circumstances. Now, when we look at this particular chart, which is a direct chart from the Profiting from CTKS Method structure course, we can see Tesla is down 28% since this particular date. Now that big push up inside the market, all of that green as well as MicroStrategy is nothing other than a retracement. We are not out of the woods yet, my friends, and it's a very important thing to keep in mind. Before you take any trades, it's very important, or investments, it's very important that you understand what structure is doing. For example, when we look at total crypto market cap, this is literally how all the tens of thousands and thousands of cryptos are all moving in terms of market capitalization. What we need to do is to gain a structural understanding. I use this exact structure when entering and exiting positions. And one thing that I saw in yesterday's price action, we were coming up into a lot of overhead structural resistance, as well as the major market indices. The S&P 500 was hitting structural resistance, the Nasdaq was hitting structural resistance as well. So that favored a pullback. And if you were looking at the cheat sheet, you would have seen that as well. One thing that I did up here, I took profit on positions up there. But the truth is, traders are always taking profit. It doesn't matter. And you may have a specific time that you trade. I certainly do. And you'll notice I put a little, very small $100 position into the market. If $100 is a lot to you, you could put a $10 position into the market. You want to do what's called a feeler position. That made in excess of 4% return. But you do those feeler methods when you think the price is likely to turn around to the downside. In other words, instead of stacking on certainty, you start to just decrease the amount that you've got in the market, but you keep on having a finger on the pulse of the chart that you're trading. Now, why am I looking at total if we're talking about PEPE? Well, the major issue is that total crypto market cap and Bitcoin are the two main controlling charts in terms of PEPE inside the crypto market. But total and Bitcoin are also controlled by factors outside the crypto market, basically the VIX, junk bonds, and the major market indices. Now, how did I position around here? I saw that this particular price was getting exhausted. It was doing a number of cut unders, and as we went further along, we had more and more cut unders favoring a potential retracement down to around this area, down to around the $2.75 trillion mark. And I'll just explain how I get that. Let's have a quick look at Bitcoin. Bitcoin and total crypto market cap will control PEPE and of course all of the other charts inside the crypto market. And I was trading more than PEPE yesterday. And I always use the structural levels on every single chart, especially PEPE, because it's quite volatile. But that volatility gives you a tremendous ROI. When we consider what was happening inside the main markets, and the interesting thing was the S&P 500 did a huge sell volume as it closed out. So people were actually getting a little bit concerned with the S&P 500, but the Nasdaq was bought into on extreme volume. I just looked at it and said, okay, this is enough. So what traders typically do, traders are always taking profits, and you will want to as well. As a trader, you always need to keep in mind what's happening in terms of interdependency and intercorrelation. I discussed this at length in the profiting course. Now remember how I was saying that total crypto market cap had more movement in the downward direction. I believe we're going to find support around the 85,728 level inside of Bitcoin. If we lose that, more bearish momentum is on the way, but I believe we'll get caught up here and have some good plings up where we can bag some snacky percentages. Under a concept called retail trade perfection, people only think they're any good inside trading if they get 100x. That's like getting into golf as a beginner and hitting a hole-in-one every time, or 3-point throws in basketball every single time from the other hoop. Or if you were a boxer, just getting a knockout on every punch. It's absolute rubbish, but people believe it for some crazy mixed up reason, which means that the majority of traders and investors unfortunately lose a ton of money because they think they aren't playing the game correctly. And they're correct, they're not playing the game correctly at all, but not for the reason that they think. When we look at Bitcoin at the current time, 86,571 is the price. We have negative alignment here. We've just come through a couple of structural support levels and they haven't done much. This means that we're going to have to get caught by lower levels in all probability. In trading, everything is probabilistic, and of course in investing as well. If it was all a certainty, as you're told by pretty much every other influencer out there, there would be 0% return. Now, what we do is that we're always assessing price for changes in momentum, changes in direction, trend, everything. Now, what we can see, Bitcoin is under pressure. You can see it quite clearly here. Increasing sell pressure is coming in at the moment, and that means that the buyers will need to step in around these levels to support Bitcoin and the entire crypto market. This is why knowing where your structural levels are is incredibly important. Typically what occurs is people draw up trend lines after the candle completes. Now, I don't know about you, but that's just a real waste of time. Why don't you get the trend lines before price prints, like this, like what we do? That is the definite way to go. From a structural perspective, Doge was looking pretty good in yesterday's price action, and it blew up, no doubt about it. Well done if you were inside Doge. The time to invest is down here, the time to trade is up when it's coming up. Traders are always booking profit. It literally doesn't matter what you trade or invest in, you must know where the structural levels are. Now, why is that important? Because if we look at gold for illustration purposes, we knew, and we've known this for some time because we talked about it in previous videos, up around the 3053 mark and upwards to the 3060 area, there was a huge amount of overhead structural resistance. Now, what does this actually mean? It means that the sellers are going to be really heavy around these areas. And what did we see? We came up through structural support, through a fairly good positive CTKS gap, came up to these areas, and now we've backed off. This is not surprising at all to us. This is the power of structure, and you know ahead of time. There's a massive correlation between Bitcoin and the major market indexes, especially the futures, when the main markets are not trading. Isn't it interesting how we always say trading, not investing, when the main markets are not investing? When the main markets are not trading. And what do we see here? Bitcoin has sold down quite significantly. This is saying there's negative price momentum inside the major market indices, and we've seen that play out across the Nikkei, across the Hang Seng, and across the ASX in Australia. This was another reason I was taking profits on my PEPE position at this time. A lot of people trading PEPE wouldn't think to look at the S&P 500 futures or the Nasdaq or the Russell or the Dow futures or other major market indexes, but it's a pretty good idea, especially if you're putting considerable sums in. When we look at what happened in the S&P 500 yesterday, it just absolutely blew up. It just went on a big rampage and then pretty much flatline, and it's trying to go up. But what is actually happening underneath inside the engine? That's what you want to be, like a mechanic on a chart. Well, you can see up here at the 5770 level, there's overhead structural resistance, and this has been the problem for the S&P 500 right now, and it has one slightly higher than that as well. We had a fairly good positive CTKS gap when we overcame around the 5700 level, and we broke through that structural overhead resistance at the 5672 level decisively and conclusively. But remember what's actually happening. The S&P 500 is just normalizing back to its negative price path at the current time. When we zoom out and have a look at Bitcoin, what are we seeing here? We had a definitive movement, absolutely, and a retracement. Why is this retracement incoming? Weaknesses across the major market indexes. Of course, and we're just coming literally back to a retracement level. That's why I was taking profit on PEPE. Now, one of the things that's not obvious when you take profit, for example, if price you buy around here and you sell around here or there, it doesn't matter where you sell. If you get your targeted rate of return and you can just start to put it back inside the market at appropriate levels, you're literally reusing your money. You're like the Fed, you're printing your own money. We've seen time and time again that the market rallies up only to dump, rally to dump, rally to dump, maybe not. We must stack probabilities, and what we know at the current time is that retracements are more than likely. Not because price is coming down, but because they were likely just hours and hours ago anyway. When you get positive price momentum, you will typically get a retracement of that positive price path or that positive price momentum. This is normal. Exactly the same thing happens on red days. That's why we buy on red. We're getting into the right side of the percentage. When we look at the S&P 500, if we look like this, everything looks rosy. Oh, it's broken out, it's fantastic, it's going to $1 million, quadrillion, zillion dollars. That will need to be proven by price action as it unfolds in the market in the next trading session. When people are fresh to financial markets, they want certainty. They want, oh Ken, it's got to go up. Sometimes you can call it. For example, in the last trading session, we could call it quite decisively because all the bells were just lining up in a row and going ding ding, this thing is going up. But when you look at this price action, getting a retracement is on the cards. That's quite a move. Even if we get upward price momentum, price is always moving in a wave, always up and down, up and down. If we break under here, we are likely to just keep on consolidating for some time. So in all reality, when you look at a chart like this, what I see personally is a major downtrend with a potential to break out, but it is as yet unconfirmed. It's not looking too bad, but I wouldn't just bet the house on it, so to speak. This brings me to discuss this little guy here. You can see this PEPE limit. This particular order that was filled, this is from my trading history. You can see this was a $100 level and it made 4.84%. Now, to a lot of people, this would be just a waste of time doing. Why aren't you putting like $1 million per level on? Yeah, that's retail trade perfection. In other words, that stuff, that kind of thinking will lose you a ton of money. You've got to be patient with all things. Typically, what my position size is, 1p is 10,000 US dollars. 2p, well, my 2p level, which is actually 5p, is 50,000. None of this is leverage, this is spot trading. Things were getting a little bit iffy inside the market, so I just wanted to see how things played out. I used these levels right now. I've just started doing it because I wanted to help people get over the fear of getting in and getting out at the right and the wrong times. And I'll be bringing you more information on this as we progress through different daily videos. But the idea, just drop it to a position size which keeps you in the chart, but is literally nothing. Now, the reason that you do that is to keep your eye on the chart and keep your skin in the game, so to speak. So if you find the chart is doing something like this, and this is what we saw, just starting to roll over, you might lower your position sizes and you might close out other position sizes at those times. And then you keep your eye on, with smaller position sizes, what the actual market action is doing. Is it repairing? Is it starting to cut over and starting to strengthen? If so, you can resume your position sizes or you can hit it hard or even harder than that. I've been known from time to time to put $100,000 or even $200,000 on one position. So the key is, it really depends on your certainty when things get very uncertain. Now, uncertain to a trader is not the same as uncertain to an investor. This kind of price action is very certain to an investor. When you see the price go up and up and up, people get excited. They say, I want in. That's certainty for investors. This is uncertainty for traders because the potential to go higher is potentially capped. Therefore, these very minor, just feeler positions are a really good idea. You want to put those at key strategic levels, and the key strategic level will depend on what happens between a couple of different charts. Your total crypto market cap chart, your Bitcoin chart, your chart of the money that you're putting into the market. In this case, it's PEPE, but I did have other trades that ran yesterday. And I also closed them out before that sell down occurred. Now, the reason for this, I was looking at the structure in terms of the market and in terms of where the market was going, based on intercorrelation between all the different charts, and I saw a weakening. For example, in the main market, we took off and then pretty much flatlined and didn't go really very much further than that. And now looking at the futures, if we were to extend that, we had this kind of action and now we're getting this kind of action. And Bitcoin is feeling it. That means PEPE is feeling it. Solana, XRP, Doge, Ethereum, they're all feeling it. When new investors and traders get into the market, they don't have any kind of mechanism to understand where the market could be headed. That's what the cheat sheet is for. Three-dimensional risk management is all about understanding that price is always moving in a wave. It always moves in a wave. I mean always. Doesn't matter what price path you're on. It could be a 1 minute chart, 1 second chart, 1 month chart. It doesn't matter. It's always moving in a wave. So if price is always moving in a wave, the concept of up only or down only is, in a word, misled. That just doesn't obey market reality. So doing your three-dimensional risk management, it basically says, where is the structure? What's the intercorrelation and interconnection between all of the different charts? And how is that impacting your money chart? In my case, in yesterday's trading, it was PEPE. All of those trades were done within 24 hours. So having your risk management is really important. Don't get trapped into thinking the news knows what they're talking about. The news doesn't have a clue what it's talking about in the main. And this is because the big interests always hide their actions from the market until they've done what they've done. And then they announce it. Hey, guess what? We did this. But it was done a week ago. What this means is every time you feel the market is going to zero, it kicks up structurally because price is always moving between structural levels. And this is what CTKS methodology is the best in the world at. It forward predicts those structural levels. It's the only methodology which does so. We also saw Nvidia coming up really strongly, but where did it go to? Right smack bang to a structural overhead resistance level. If you know where these are, you're ahead of 95% of people, and you need an edge. If you're hanging out for some free stuff, go to ctksmethod.org and you'll get to the homepage. Just scroll down here and you can get the free cheat sheet. It's an absolute ripper. And also, there's some videos there that will help you to fill it out, and you can get the official ticker list for the service. It's phenomenally good, and it's absolutely free. And if you would like the PEPE indicator, just go across to the yearly tab and then just scroll down and you can pick it up there. You can see I made about $11,000 profit yesterday, past 24 hours by using it. It's a ripper. Concentrating your focus is a really good idea, and when it comes to the cheat sheet, you can focus in, of course, on Bitcoin and total to understand where the markets are going, how that correlates and intercorrelates with row 3, and especially the VIX is driving things at the moment, so please keep your eye on that. Please let me know in the comments, what are your favorite things to invest or trade in? Just drop the tickers in the comments and I'll see what I can do in upcoming videos to help you out. Our focus as a community is to always be dedicated and committed, understanding that we win or learn and there's no need to blame. But there is a requirement to learn. Life is always full of problems, but if you solve those problems with positive excellence, you'll find that things get better and better. It's really important to have an inner peace and outer peace in terms of life, because no matter what you're doing, you're going there with yourself. So if you're not happy as you progress through life, well, you can be, but you need to focus on positive excellence. That's what will give you the kick, the real kick out of life. And always remember, all of those problems that you go through in life, life doesn't happen to you, it happens for you. These life pullbacks, just like what we get inside the markets, are setting you up for the next life rally. This is the time where you get to reflect, you get to do things more effectively, and then you get to reap the harvest that comes after. And if you're going through a life pullback at the current time, our love and healing thoughts are with you. You're not alone, and the sun will come out again. What you will find, these pullbacks, just like in the market, are very, very normal. But they certainly don't feel normal when you're going through it. But if you look back years back into the future at your different pullbacks that you had, they each lead you to get more and more strength. And when you get more and more strength, you go up this strength curve. Strength is required to fill your purpose and destiny. You're being molded and shaped. You are exactly where you need to be. So don't worry about it. It will pass, but you will get stronger and stronger. And that is the key. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.